Hi, I'm Nick Harris. I'm the Tech and Telco Analyst here at Morgans, and I'm here today to talk to you about Telstra. Telstra is a household name, so probably needs little introduction, but just in case you're not familiar with it, it provides mobile and communication services to around half the population around Australia, and especially in regional areas. So we've recently added Telstra to the Morgans key picks for 4 key reasons. Number 1, industry headwinds have become tailwinds. Number 2, underlying earnings for Telstra have returned to growth. Number 3, they've just completed a legal restructure which has the potential to release significant value. And number 4, at today's price, we don't think you're paying for any of that upside. So we think it's really a free option if they can release value in those assets. So if I talk about each of those 4 points in a little bit more detail, number 1, the tailwinds. If you reflect over the last decade or so, we've had the NBN rollout, which has put a massive hole in Telstra's earnings. That has actually led to price-based competition, so prices going down for fixed and mobile. As revenue goes down, if you can't change your cost base, clearly your earnings goes down. And so what we've seen is earnings decline and the share price follow that on lower revenue. That's reversing now. We've seen price rises happening fairly consistently and stably over the last 12 or 18 months across both the mobile network and the NBN or the fixed line network. Number 2, if we talk about the underlying growth in the business. For Telstra, it really is all about mobile. More than 50% of its underlying EBITDA comes from earnings in the mobile business. So what happens here is what matters the most really for Telstra. You've probably seen it yourself. Prices are going up. Telstra have raised prices. Optus have raised prices. People are paying more for the quality of these services, including 5G. Second point under here is clearly most people would have heard about the Optus hack. It's clearly a sad and bad event for everyone who's been impacted by that. And we shouldn't gloat because cybersecurity and hacking could happen to anyone and in fact is going to be more and more common. So definitely not one to rest on your laurels about. However, from the perspective of Optus, clearly this is quite damaging to their brand. So one person's loss is another's gain. We think there's a reasonable chance that both Telstra and Vodafone add market share or add customers as they leave Optus. And then just to wrap it up, I guess if we look at FY22, the underlying EBITDA in Telstra grew by about 8%, and we expect a similar growth rate over the next 12 months. If we move on to point number 3, the legal restructure. We've seen shareholders and the court approve the restructure of Telstra into 4 separate business units. So those 4 business units are, number 1, ServeCo. So this is the Telstra retail brand, the customer-facing brand. Number 2, we've got InfraCo Fixed. So think about the ducts when you walk down the street where both the NBN and others put their cables. Number 3, Telstra International. So that's basically submarine cables. Believe it or not, Telstra carries around a third of Asia's internet traffic. And fourth and finally, Amplitel, which is the mobile towers business. Telstra, probably over 12 months ago, sold 49% of that for a very hefty premium to some infrastructure investors. And we're hoping they can repeat that again now that they've been able to restructure the business. So the fourth and final point really is the value creation potential here, or a free option as we look at it on releasing value. So if you look at Telstra historically, it's traded on around 6.5 times EV to EBITDA. It's trading pretty close to that level now. So number 1, we don't think much is priced in. Number 2, we don't think there's much downside in terms of interest rates or earnings trajectory impacting the value of the core business. So limited downside, free option on the upside not being priced in. If we give you an example of that, Telstra sold part of its mobile towers business, in fact 49% of it, for 28 times EV to EBITDA versus, as I said, it trading now on around 6.5 times. So clearly these infrastructure investors are valuing those assets at nearly 4 times what traditional Telstra shareholders are valuing it at. So of course, in life there's no guarantees, but if they can do this again, there's definitely the potential for value creation, and you're definitely not paying for it at these prices. So we see it as a free option. So in summary, we have a positive outlook and growing earnings on an underlying basis. We see little downside, with the exception of obviously black swan events, and we see free upside if Telstra is able to release value from those infrastructure assets. Thank you.